Best recession-proof businesses to start in 2023? Working around the clock isn't feasible long term, but that doesn't mean you can't be earning money around the clock. With a combination of passive income streams and making your current saved money work for you, you can see firsthand how to build wealth significantly. Despite the laundry list of ways to make money while you sleep above, I won't pretend that it's easy to wake up richer than you were the day before. There is no denying that business startup costs, both financial and emotional, can be grueling to bear. What I will highlight, however, is the silver lining to the storm cloud. Once you've seen your business grow to a certain point and find it to have become successful and thriving, you can branch out to find ways to make money while you sleep. Sometimes, trading in your time for money barely seems worth it. Wouldn't it be great if you could learn how to make money while you sleep? As it turns out, you can. In some situations, you can literally get paid to sleep, while others require upfront work creating a passive income, and still other methods get the money you already have to increase itself. If you have interest in learning about the art of making money in your sleep, continue reading below for the top proven ways people have invested in income producing assets or activities used to date. 1. Invest in the stock market. You've likely heard the phrase, "It takes money to make money." Indeed, having some money makes it easier to get more. A wonderful way to passively make money long term is to invest. When people think of investments, they often think of the stock market. When you start investing money in stocks that are considered safe, no stock is 100% guaranteed to make you money. You typically end up with a profit for doing nothing but letting the asset increase in value. That's why the stock market is one of the best investment for young adults. You can buy stocks with a brokerage geared toward beginners like Plink. The services allows you to create a diversified portfolio with no costs for making trades nor maintaining account minimums. The service may charge $2 per month for features they offer in the future. Once you create an account and deposit money, you can use the app as an automated investing tool, allowing you to add money and have the app handle how it gets invested. A diversified, low-cost portfolio held across long periods of time can easily result in making money while you sleep. As an honorable mention for those looking to be a bit more active, you might also consider opening an account with Webull. This free stock trading app has rapidly risen to become recognized as one of the best stock research apps and allows you to trade with no cost. Additionally, the service offers free stocks to users who sign up, providing an added incentive to open an account and make an initial deposit. 2. Invest in alternative investments. The stock market isn't the only way to invest. Given the recent market volatility we've seen in the stock market related to a global health scare, sometimes having a non-correlated asset allocation in your investment portfolio is a wise choice. Alternative investments might provide added diversification for you to continue building wealth. Many options exist for investing your money in alternative investments as fintech companies have unlocked access to markets once only available to wealthy investors. From markets like real estate investing, fine wine investing, rare art and more, you can tap into investments which have continued to appreciate over time. 3. Open a high-yield savings account. Another way to make money you already have work for you is by putting it in a high-yield savings account or certificate of deposit, CD. A standard savings account offers an interest rate of around 0.01%. Meanwhile, high-yield checking and savings accounts can have interest rates exceeding 1%, meaning they're about 100 times better at building interest than a typical savings account. However, recent economic developments have pushed many of these accounts below the 1% threshold for the time being. With time, these accounts will likely index back to have superior rates to most standard savings accounts found at megabanks. In exchange for these higher rates, some accounts can have you lock in your money for a set amount of time. Before creating an account not easily accessible at any time, make sure you have an emergency savings account you can always access. 4. Fine wine. Fine wine as an investment has performed admirably over the last 20 years, outpacing even the S&P 500 during an equivalent period while seeing less overall volatility. Tapping into fine wine investing might prove a challenge if you don't have the necessary capital and infrastructure to source, store and sell fine wine over long periods of time. One alternative is investing through a company like Vint. Vint is an SEC-qualified fine wine and rare spirits investing platform that makes diversified investing accessible to all investors. Vint offers fractional ownership of investment-grade collections sourced by a team of experienced wine and investment professionals. Vint's low minimums, sourcing, and securitized offerings make them unique in the alternative investment space. The company allows you to invest as little, get started for around $50, or as much as you want in collections curated by a team of wine industry experts. When you invest, you own a piece of the collection, giving you unique diversified exposure to many labels and not just one or two bottles. The company makes it a point to put transparency first, providing regular updates on their collections and sharing investment theses with all investors so they have full control around their investment decisions. The company is on a mission to bring wine and spirits to every portfolio. If you think adding fine wine to your investment portfolio makes a sound decision after learning about Vint, consider joining now and funding an account with as low as $50. 5. Real estate investment trusts, REITs. Some people consider real estate investment trusts, REITs, to be the mutual funds of real estate. REITs are a collection of properties operated by a company that uses money investors give them to buy and develop real estate. You can choose to invest in trusts that build condos, apartment buildings, business complexes, or other facilities. REITs pay you dividends. These are a fitting income-producing asset for people who want an easy way to get involved with real estate investing without having to purchase property themselves. One avenue to explore for investing in REITs is by investing through Streitwise. Streitwise is a new era of real estate investing. With capital raised by qualified investors, the company leverages the best-performing property investments into professionally designed portfolios. The returns then get distributed and serviced through an online REIT with your income as their mission. If you're looking to generate passive income while conserving cash on hand, Streitwise provides the perfect opportunity. For both accredited and non-accredited investors and offers one of the lowest fee structures around. The company has provided an 8.4% annualized return due to its superior property selection and low fee structure, far outpacing comparable public REITs or bonds. Qualified investments include properties stretching largely across America from the Midwest to the West Coast and leveraged based on Streitwise's analysis. By placing $5 million of their own money in these investments, Streitwise places a good deal of skin in the game for all sponsors and 100% incentive alignment between sponsor and investor interests at all times. The service has a minimum investment of $5,000 to begin investing in commercial real estate properties. The company provides REIT offerings federally registered with the SEC and offers them to both accredited and non-accredited investors. Investing through an investment vehicle like Streitwise's REIT offers a great source of passive income, recurring cash flow, higher returns, portfolio diversification and inflation protection. With an 8.4% annualized return and a low fee structure, Streitwise provides one of the best opportunities for passive income in real estate investing. It outpaces comparable REITs and has delivered an annualized dividend return of at least 8% for the last 17 quarters, with an average annual rate of 9.44%. Despite COVID's effect on the general real estate market, Streitwise met return targets through employing strong credit tenancy. 100% contractual rent obligations met in 2020, conservative underwriting, 51% loan to value, LTV, and a low, transparent fee structure. Like, comment, share and subscribe to my channel.